If you want to trade successfully, what should you do at first? At first, you have to do the top-down analysis. If you don't do that top-down analysis around the weekend, then you will trade without any plan. Okay, it's like you are actually riding a boat without any destination in the deep of the sea. Make sure that you have done your weekly analysis, and every week you are starting with your weekly analysis by this weekly chart of dollar index. If you are a trader, I mean forex trader or the future trader. Today I'm not going to go to the calendar, but first you have to watch the calendar, and from there you have to understand that where you have the red folder or medium impact news, so that you can understand that there can be some volatility. Now I have done it. You please do it by yourself. You can see this is the weekly chart from dollar index. Oh, by the way, before going into this video, make sure that you have given me the thumbs up and you have subscribed to my channel if you are new. Sorry, your support, actually I need your support, to be honest, brother. Be our family member. This is the weekly chart for dollar index, and you can see that I have this relatively equal lows around that area, lot of lows. So this is a perfect support zone. Retail trader, they are thinking that this is a very strong zone, so market is unable to break that zone. Now I am expecting that market is going to break that zone. It is going to take this sell side liquidity, then we will see which way it can reverse. I have this buy side liquidity, that means the resistance zone here, here, and finally here. I have all of this resistance zone over there. That is my buy side liquidity, where is actually the buy stop. That is my buy stop, that is my sell stop. First target is market is going to take this sell side liquidity. Below this sell side liquidity, you can see I have a weekly fair value gap around that area. Previously market has been reversed from the top of this fair value gap. So my first intention is market is reaching at least until the consequent encroachment, that means the CE of that fair value gap. Then I have to decide, is market reaching higher again, or is it going to go for that last fair value gap. Above this last fair value gap, I have a swing low, which is also a liquidity. Market can reach until that low, which is low probability for me. Above this swing low, I have the weekly order block min threshold. So let me actually mark it. So my first intention is market is reaching at least until this 50% of that fair value gap. When market will reach over here, I will start to look for buy for dollar index. But if I see body close from from daily chart, body has closed below the 50% of that week, then my target will be below the consequent crossband, then my target will be until this mean threshold. If I see this mean threshold is broken, then my target will be here. Every single area when market will tap, for example the consequent encroachment, I will start to look for buy. When market will tap to this weekly mean threshold, order block mean threshold, I will start to look for buy. If this one is broken, I will start to look for sell until this area, until this last fair value gap. Now it is a long-term plan because this is the weekly chart. It doesn't need to happen by this week. This week simply market can come until this consequent encroachment, then it can go a little higher and it can stop like that way, because this is the weekly range. Just if you look at the weekly range, there is no need to reach until even until this weekly mean threshold. It can simply come until that area, then it can go a little higher. It can do that, okay? Or maybe it will go through this area and it will reach until the low of this last fair value gap. Then the week has ended. So anything can happen, but simply I will start to look for buy when market will be to the consequent encroachment, to that fair value gap. Until this area, I'm gonna sell. When market will reach over there, I will start to look for buy. But if I see that no, market doesn't want to go higher, instead of that market would love to go lower, that's why it has closed below this constant encroachment, then I will start to look for sell until this weekly order block mean threshold. When it will reach over here, maybe this week, maybe next week, I will start to look for buy again. If I see this is broken, then I will start to look for until this last fair value gap. Then when it will come over here, I will start to look for buy again. So this is the part. Why I'm telling like this way? Because I have the buy side liquidity. Look, I have just the buy side liquidity. I don't have any kind of sell side liquidity. So market can, this is the retracement. Okay, what type of retracement? Look at this order block. Market is reacting from that order block from weekly chart. This reaction, how far it will go, I have no idea, as I don't have the liquidity. Over here, I have a lot of buy side liquidity, so it is easier for me to frame the buy setup instead of sell setup. From sell setup, I have this sell side liquidity only. When this is taken, I don't know how far it will reach. So when market will tap any kind of specific level, I will start to look for buy. If I see that no, market has the intention to go little lower, I will go for sell for the next level. Okay, now let's go to daily chart. From this daily chart, all you can see, this is that weekly fair value gap, and this is that relatively equal lows over there. Here, this is that relatively equal lows. So far, market is going to take this sell side liquidity. Now, some of you can think that this is the bearish fair value gap, so market will first go over there, then it will fall. I don't want to see that, because eventually I would love to see market will go higher. Okay, I'm not thinking that market is falling for forever. No, actually, market is going to reverse again, but for that reversing, it has to left some fair value gap open over there. In that type of situation, I will think that market is in rush to take some liquidity, then it will go back again for the buy side liquidity. If it trade that bearish fair value gap from daily chart, then I will start to think no, market is extremely bearish. It will go maybe until this last fair value gap, or maybe until this liquidity, any level. Okay, that means it's longer term bearish. That's why I want to see that it will be open. Instead of trading that fair value gap, market will just take this sell side liquidity, then either it will use this last fair value gap from weekly chart constant crossment, or maybe it will reach until that order block from one order block mention of that weekly order block. Okay, at the same time, I have this bullish order block from daily chart, so it is also important. You can see the open of that bullish order block and the constant crossment of that weekly fair value gap is around the same level. So this is a very strong place where market can reach and then market can reverse. I am bullish overall. I'm bullish for dollar index. Okay, so here I don't want to go lower time frame, because overall it is obvious that market is reaching for this area, for this fair value gap, for this sell side liquidity. Then we have to wait for further information where market is actually would love to go. The Sunday open can change all of this analysis, because Sunday opening gap is extremely important. So make sure that you are doing your own analysis and you are actually looking for your better opportunity. The way you do it, you can just compare your analysis with mine. Okay, don't take my analysis as your analysis. Now I would love to go to Nasdaq. So let me go to Nasdaq. So guys, here is Nasdaq, mini S&P, mini Nasdaq weekly chart, and so far you know what is that minus 2.5 standard deviation. Tomorrow around 8 a.m. Newark local time, I'm gonna upload a video about standard deviation. Over that video, by that video, you are going to learn how to predict the exact closing. Look at this close around that high. You are going to predict that high by using the standard deviation. Same rules, okay? So you are going to get that video tomorrow around 8 a.m. Newark local time. Make sure that you have watched that video. So over here from that weekly chart, so far you have seen that market has been rejected from minus 2.5 standard deviation from monthly chart. I have marked that long time ago. Okay? So it is now reversing from there. It can be a long-term reverse, but I'm not expecting a long-term reverse until I get a bearish fair value gap from weekly chart. So when I will get a bearish fair value gap, and then that bearish fair value gap will be respected from weekly chart at least, then I will start to think it's a long-term bearishness. But here, after just seeing one candle, I just can't simply say that market is now going to reverse for a lot of liquidity around that area. Here, all I am seeing that this down close body close candle, I would love to see market will reach at least the high or the open of that down close body close candle. Okay, so in that area, I am expecting market is now reaching for. If it is overzealous, then obviously it can work with this bullish fair value gap from weekly chart. We will see that later, but right now I'm just thinking market is going to reverse. That reaction is coming from minus 2.5 standard deviation. That will be just a reaction, not reversal. Okay guys, But at the same time, if it keep going higher, I mean the very next candle start to open and then work with this parabolic gap. There is a small parabolic gap you can see from weekly chart. If it work, I mean respect that weekly parabolic gap, then start to go higher, we will see that as well. So far I'm thinking that market is at least reaching for that high or maybe open. If this parabolic gap is broken, then I will expect market is going for that open of that bullish parabolic gap. If this one hold the price, then I will start to think market is going higher again. Let me go to daily chart. So here is daily chart. All you can see that this is the order block. Why that is the order block? Because this is the highest up close body close candle which has traded the most obvious parabolic gap. But brother, there is no parabolic gap. When market is at the all-time high, you have the joker, so you can make anything over there. Okay, so if you play the playing card, in playing card there is a card named joker. So if you have that joker on your hand, you can make that joker any kind of card you want to make. So here when market is at the all-time high and I don't have any kind of price action over there, so I can make this one anything. So far this is the bearish order block, and you can see market has traded that low of that bearish order block. I'm expecting that market will reach at least until this last parabolic gap from daily chart. So let me mark this last parabolic gap from daily chart. Over here this is the last parabolic gap from daily chart. So I would love to see that market will reach at least until that last parabolic gap before going higher again. If this parabolic gap is broken, then this relatively equal loss from daily chart and this last parabolic gap will be my next target. Okay, but so far I'm just bearish until this last parabolic gap. Then I will start to look for buy again. If this one is broken or market work with the lower portion of that last parabolic gap, then I will start to think no, market is not going higher, actually it is reversing again. Let's go to hourly chart. From hourly chart, all you can see that market has taken all-time high. This is that CPI week which has taken all the liquidity, then market fall dramatically. This is the last parabolic gap from hourly chart. Market has been traded that hourly last parabolic gap, and if you just mark that last parabolic gap over there, I will remove this one. Actually, you can see that market has tapped to the 50% of that last parabolic gap tick by tick. Then market is reversing. All I would love to see the reaction from this last parabolic gap, so it will react little bit from that. That reaction can send the price until this area, I mean until this order block area or this parabolic gap area. There below this parabolic gap I have another parabolic gap. I really would love to see that market will come back again until the low of this parabolic gap, then it will fall. Okay, then it will fall. I have this last parabolic gap from hourly chart around that area. So here you can see this last parabolic gap from hourly chart. My first target is market is reaching for that last parabolic gap from hourly chart, but before reaching over there, it should come back again to the low of this last parabolic gap from hourly chart. Now I don't want to use this one because I would love to mark this one from 15-minute chart. So from 15-minute chart, if you see from 15-minute chart, this is the entry parabolic gap, this is the last parabolic gap from 15-minute chart. It has been rejected from the constant cosment of that entry parabolic gap tick by tick. Okay, so I really would love to see that market will expand little higher at least until this parabolic gap, then it will reverse again. Here this is the bullish parabolic gap. Right now market has tapped to this bullish parabolic gap from 15-minute chart, which is also the last parabolic gap from 15-minute chart. Okay, so I'm just expecting some kind of reaction from there, then market will fall. Now you can see I still kept that sell side liquidity, but brother, it has been taken over there, right? It has been taken. Now this is the week by news. I don't see that this sell side liquidity has taken yet. So in my opinion, this sell side liquidity is still valid. So my intention is market is actually after reversing from either the low of that hourly last parabolic gap or from this parabolic gap, they are almost around the same area. From this area, market will fall again. How far it is going to fall? This is that last parabolic gap. This is that weekly last parabolic gap from hourly chart. Weekly parabolic gap, weekly bullish parabolic gap, and daily last parabolic gap. So until any of this area, I'm bearish. And when market will reach around that area, the way I explained the dollar index, I will think like that way, that market is now going to reverse again for the all-time high. I'm not done, I guess, with the upper run. All I need a bearish parabolic gap, and I would love to see that bearish parabolic gap is going to be respected from weekly chart for thinking that long-term bearishness. So over here, this is my overall expectation. But if I see that market went through this entry parallel gap, I have this last parallel gap. That is my last line to hold the price and send it back for the sell side liquidity again. As I don't have any buy side liquidity, I really would love to see that market will fall and it will work with the lower portion first. Then we will see if it can go higher or not. At the same time, don't forget the narrative. The narrative is Monday should be the accumulation day. This Monday is gonna be little volatile as we have Fed Chair Powell speak. So it can be little volatile. It can be a volatile accumulation. Then there will be a manipulation. Market will take some kind of buy side liquidity. Then Wednesday expansion, Thursday continuation of the expansion, Friday reset. So if you see market is going higher, don't get panic and don't think that market is just reversing. This is my expectation. Okay, don't take it as your analysis, please. Again, so this is how I'm gonna predict the price action, and I actually make the weekly bias. Then I use that narrative things for using that weekly bias for my everyday daily bias, okay? Everyday bias. So that's all for today's video, guys. If it is insightful, don't forget to write down the boom to the comment box, and don't forget to subscribe to my channel and give me the thumbs up. If anyone have any kind of doubt, don't forget to let me know in the comment box. So until the next video, cheers.